So hi friends, good morning all of you. So shall we start with problem number 4? We are discussing partnership amalgamation, sale and conversion of partnership firm into a company. In that we have already completed 4 problems. Now let us see problem number 4. Okay, this problem is also a problem on valuation of goodwill, admission of a new partner and conversion of partnership firm into a company. So all the 3 things are simultaneously there. What are they? 1, you need to calculate goodwill here. 2, you are admitting a new partner. And then 3, you are converting partnership firm into a company. All the things are there. Okay, so look here carefully. The following is the balance sheet of Messrs. CA and B as on 31st March 2015. A's capital 40,000, B's capital 50,000. Then A's loan 10,000, general reserve 10,000, liabilities 20,000. So total 1,30,000. Then land and buildings 50,000, stock 30,000, debtors 20,000, investment in 6% debentures in X Limited 20,000. Put a tick mark on this. That 6% debenture interest you will get now. So what is the investment in debentures? 20,000. What is the debenture interest rate? 6%. So what will be the interest you get? Can I say 20,000 into 6%? Okay, so is it 1,200? Yes, that is non-operating income. Non-operating income. It is not operating income. What difference it makes? Calculation of goodwill. So put a star mark on there. Cash 10,000. So total 1,30,000, 1,30,000. It was agreed that Mr. C is to be admitted for 1/5 share in the future profits from 1st April 2015. He is required to contribute cash towards goodwill, underline, towards goodwill. How much? Not given. We need to calculate. And 10,000 rupees towards capital. So he will bring 10,000 capital. That is given in the question. That I know. Goodwill how much? Not given. You calculate. Okay. The following further information is furnished. 1. Partners A and B shared the profits in the ratio of 3:2. So previously there are only 2 partners, A and B. Before admission of C, there are only 2 partners. They used to distribute profits and losses in 3:2 ratio. Mr. A was receiving a salary of 500 per month from the very inception of the firm in 20YY. Long back the firm was incorporated. Since then he was getting 500 per month salary. That means 6,000 per annum. So this salary is paid in addition to share of profit. Okay. 3. The future profit ratio between A, B and C will be 3:1:1. Mr. A will not get any salary after the admission of Mr. C. Underline. Mr. A will not get any salary after admission of Mr. C. Pavan sir, what difference it makes? While calculating goodwill, remember, see, there is no calculation of goodwill, valuation of goodwill in your syllabus. If you remember 2 years back in CA intermediate new syllabus, valuation of goodwill was there. Valuation of goodwill was there. Now it is deleted. Valuation of goodwill is not there in your syllabus. Also, this mutual funds, accounting for mutual fund companies was also there. That is also deleted. Okay. So if this chapter is there, then you will understand why, that debenture interest plays a big role. Why this salary of partner will make a big role. All these things you know. Now you do not know, so don't worry. I'll give you a note for that. I'll give you a note for that so that you understand the principle. The goodwill of the firm should be determined on the basis of 2 years purchase of average profits of last 5 years. Oh my God. So this data is given for goodwill calculation. So the particulars of the profit are as under year ended 31/3/2011, 12, 13, 14, 15. First year there is a profit of 20,000, next there is a loss of 10,000, then again profit 20,000, profit 25,000, profit 30,000. Then the above profits and losses are after charging Mr. A's salary. So this is after charging A's salary, these are the profits. The profit of the year ended 31st March 2011 included extraneous profit of rupees 30,000, abnormal profit, profit because of some abnormal transaction, 30,000, underline. And the loss for the year 31st March 2012 was on account of loss by strike to the extent of 20,000, underline. So this is abnormal, should be adjusted. This is abnormal, should be adjusted. B. It was agreed that the value of the firm, value of the goodwill of the firm should appear in the books. So value of goodwill appears in the books. So you will raise the goodwill, you need not write off the goodwill. You will retain it. Okay, then the trading profit and loss account for the year ended 31st March 2016 was 40,000 before depreciation. So you need to calculate depreciation and you need to subtract from this 40,000. Okay, the partners had drawn each 1,000 per month as drawings. So partners are drawing 1,000 per month each as a drawing. The value of other assets and liabilities on 31st March 2016 was as under. Building before depreciation 60,000, stock 40,000, debtors nil, investment 20,000, liabilities nil. Oh my god, how big problem it is. Investment 20,000, liabilities nil. Provide depreciation at 5% on land and building on closing balance and interest at 6% on AS loan. In the balance sheet, AS loan is given. AS loan. So that is 10,000 rupees is the loan. On that you need to calculate interest at 6% per annum. They applied for conversion of the firm into a private limited company, ABC Limited. Certificate received on 1/4/2016. They decided to convert the capital accounts of the partners into share capital in the ratio of 3:1:1 on the basis of total capital as on 31/3/2016. So you need to calculate total capital and you need to distribute that in 3:1:1 between these three partners. If necessary, partners have to subscribe to fresh capital or withdraw. So if there is any excess or deficit is there, either if surplus is there in the partner capital account, give cash to him. If he has to bring more money, they will bring cash. That is the understanding. Prepare statement of profit and loss for the year ended 31st March 2016 and the balance sheet of the company. Oh my god, such a lengthy and big question. Read the question once again. All of you, read the question once again. Read. So are you done? You read the problem? So we do the problem step by step, okay? So once you read the problem, we will do the problem step by step. So first let us go to calculation of goodwill. Calculation of goodwill. Put the heading problem number 4 in partnership. Problem number 4, calculation of goodwill. Particulars. So 2011, 12, 13, 14, 15. 5 years they have given. Correct? In that, first write the rule. Okay, here put the heading note. Somewhere you can write the note. For calculation of goodwill, comma, only operating profits are relevant. Therefore, if there is any non-operating profit or loss, eliminate it. What is that? For calculation of goodwill, only operating profits are relevant. So if there is any non-operating profit or loss, eliminate it. Don't consider it. Also, any change in costs or revenues to be considered. Any change in costs or revenues. For example, at present you have 6,000 rupees of salary that is given to Mr. A. 500 rupees per month into 12 is 6,000. In future, that expense will not be there, no? So you will add back that to profit. Why? See, goodwill is calculated for future. Not for past. But past data is the basis to calculate future profits. Past data is used as basis to calculate future profit. So I don't want past profit. I want future profit. But how will I calculate future profit considering the past data? In the past, there is 6,000 rupees of salary. Okay, after paying 6,000 rupees of salary, say there is 10,000 rupees of profit. But in future, this 6,000 rupees of salary need not be given, no? So take 10,000 profit, add back 6,000. Why? This 6,000 is not required in future. 6,000 expenditure not required in future. So you will add back. Okay. And so, note 1, calculation of goodwill, operating profits are relevant. If there is any non-operating profit or loss, eliminate it. 2, also any change in revenue is to be considered. 3, goodwill is calculated for future, not for the past. Past data is used only as the basis. This is third note. 4, point number 4. Abnormal losses or profits are to be eliminated. Why? They will not recur, because they will not recur regularly. They will not recur regularly. So if there is some labor strike. Because of labor strike, you lost 20,000. Will it happen every year? No, it happened once in 5 years, once in a business cycle, or sometime it happens. That doesn't mean you need to consider it every year. So you need to make these adjustments for calculation of goodwill. After that, put the heading calculation of goodwill, particulars year 2011, 12, 13, 14, 15. Okay, now profit as given. Profit as given. So what is the profit given? Go back to the problem, J problem. So 20,000 profit first year, minus 10,000. 20,000 minus 10,000. 20, 25, 30. So these are the profits as given. So do we need to make any adjustments? Yes, adjustments. Adjustments. What is first adjustment? Abnormal profit. Okay, so look here, there is some abnormal profit in first year, 30,000. So that profit should be reduced, minus 30,000. 1 year abnormal profit is there. Every year it will not come, no? So subtract. Then 2, labor strike loss. So loss was on account of labor strike. Loss on account of labor strike. Which year? 2012, 20,000. So add back 20,000. If it is loss, we'll add back. If it is profit, we'll subtract. ये भी हो गया. Then what other things are there? Mr. A is getting 500 per month salary. So A's salary 3. Partner's salary. So 6,000. Every year 6,000. Add back. Every year 6,000. Add back. 4. Do we need to do anything? 1 indirect adjustment is there. All these things are given in the question. But this 6% debentures is not given, but that is non-operating profit, isn't it? Interest on debentures, dividends, all these things are non-operating income. So 20,000 into 6%, non-operating income. 20,000 into 6%, how much? 1,200. Every year 1,200 you will write. So adjusted profits add karo. So adjusted profits. Okay, like that calculate adjusted profit for all the years. Do it for all the years. Okay, so abnormal profit reduced, loss added back, expense added back, debenture interest. Oh, this is income. Hello, hold on. Income should be reduced. Minus it is. Okay, that's it. So check, you got these answers. First year it is loss. Next 4 years it is profit. So add all the 4, total profit for 5 years. So first one is minus, all the remaining are less. Plus 34,800 plus 29,800 plus 24,800 plus 14,800 minus 5,200. So it is 99,000. So average profit per annum, this divided by 5 years, 19,800. Goodwill is calculated at 2 years purchase of average profit. Goodwill is equal to 2 years purchase of average profit is equal to 19,800 into 2, that is equal to 19,800 into 2, that is equal to 39,600. 39,600. You understand, this is valuation of goodwill. Very important. So, since Mr. C is admitted into partnership with a share of 20%. How 20%? 3:1:1. In future, profit sharing ratio will be 3:1:1. That means C will get 20%, no? So he has to get 20% of the goodwill, because the above 39,600 is the goodwill of the total firm. But he is getting only 20%, so he will bring 20% goodwill. Because Mr. C is admitted into partnership with a share of 20%, he has to bring 20% of firm's goodwill. So C has to bring A, capital 10,000, B, goodwill, how to calculate? 39,600 into 20%. Into 20%. So 7,920. Total. So C has to bring this much of cash. So when you are writing partners capital accounts, in C's account you will write by bank. C is bringing cash by bank or cash, 17,920. This is your working note number 1. You understand it? So see the calculations. Take just 2 minutes of time. See the calculations. Try to understand what it is. You are done? Can we move further? Can we move further? Now we'll calculate profit and loss account. See, up to 2015 this drama. 2016 P&L will prepare. Profit and loss account for the year ending 31/3/2016. Particulars rupees. Particulars rupees. Okay, so now look at the problem. They said, after the whole drama is over, the trading profit for the year ending 31st March 2016 was 40,000 before depreciation. That means before adjustments they earned 40,000. Okay, so here we'll write by profit 40,000. Then to depreciation. So what is depreciation? They have given land and building 50,000, correct? This is 31 March 2015. So land and building 50,000. On that, what is depreciation? Did they give what is the rate of depreciation? The value of assets and liabilities as on 31st March were given as under building before depreciation 60,000. This is revised value of building. Okay, so building is 60,000. What is depreciation rate? Kahan hai? Provide depreciation 5% on land and building on the closing balance. Opening balance 50,000. Revalued. So revaluation is given 10,000. So total it is 60,000. But we should not consider opening because the problem is clear. Provide depreciation at 5% on land and buildings on closing balance. So building closing balance is 60,000 into 5%. So 60,000 depreciation on building. Though they said depreciation on land and building, you should use depreciation on building only, okay? Because land is a non-depreciable asset. 60,000 into 5%. So calculate 60,000 into 5%, how much? 3,000. Do we need to consider anything else? Yes, indirect adjustments are there. By debenture interest, you have invested money in some companies' debentures, no? So whether they tell it or no, you will get interest. So 20,000 into 6%. So you will get 1,200. Though it is non-operating income, when you are preparing P&L account, you have to consider it, okay? For calculation of goodwill, it will be eliminated. For calculation of profit for the year, you will take that interest because it is actually received. When you receive debenture interest, what is the journal entry? Bank account debit to debenture interest. Then debenture interest account debit to P&L. In P&L by debenture interest. That is what we are doing. Clear? Anything else there? Yes, they said EA's capital, EA's loan is there, no? On that you need to charge 6%. What is EA's loan? EA's loan is 10,000. EA's loan is 10,000. So on that to interest on EA's loan. So 10,000 into what is the rate? 6%. 10,000 into 6%, 600. Okay, so whether they give you all these details or no, you have to consider. You have to do it. Okay, now calculate profit or loss. So credits, it is 41,200. So take 41,200 here, then 3,600. 41,200 minus 3,600. 37,600. 37,600. Distribute this 37,600 between to profit. Okay, here we write this profit will be given to A's account, B's account, C's account. Okay, A's profit how much? 37,600 divided by 5 into 3. 22,560. 22,560. What about B and C? They will get 7,520. 7,520. This guy also will get 7,520. So you prepared P&L and the profit of 37,600 is distributed among partners in their agreed ratio. With this, P&L account is over. Now you need to do partners capital account. Okay, so you are done with this. Can we prepare partners capital account? Did you finish copying it? Or if you want to copy, I will give you 1 minute of time. Copy it fast. Copy karo. Okay, so here partners capital account, particulars A, B, C. So this is partners capital account. Okay. So go back to the problem. First take opening capitals. Okay. A ka opening capital how much? 40,000. B opening capital 50,000. So we'll write by capital or by balance. Brought down. Okay. So here it is 40,000, 50,000. C has no opening capital. During the year, C is bringing by bank. By bank. How much he will bring? We have already created one working note, 17,920 rupees. Okay, 17,900 and we'll write this little later. 17,920. Why? Before that, we will have to show distribution of, ye dekho, this general reserve 10,000 is there, no? Who will take this general reserve 10,000? Do you think A, B, C, all the three will take, or only A and B will take? On this date, C is not there, my dear friends. So whatever the goodwill we calculated as on 31st March 2015, whatever the general reserve balance is there, general reserves on 31st March 2015, this belongs exclusively to A and B. From next day onwards, C is coming. You understand? So this general reserve 10,000 belongs only to A and B. General reserve. Okay. Their ratio is 3:2, no? Their ratio is 3:2. So total 10,000, 3:2 means 6,000, 4,000. C will not get anything because that day C is not there. And then by goodwill. Goodwill also we give in 3:2 only. Goodwill we calculated. What is the goodwill? 39,600. So take 39,600. Take 39,600 divided by 5 portions. In that, 3 portions belongs to first guy, 23,760. 2 portions belongs to second guy. How much it is? 15,840. Third guy will not get anything. Then by bank, third guy came today, finally. Okay, just look at the numbers. Again, general reserve and goodwill are existing on 31st March 2015. That day C was not there. C entered from 1st April 2015. So goodwill and general reserve belongs only to old partners. You should not give that to new partners. You understand? Then we have prepared one P&L just now. Look here. This is P&L for 15-16 year where C is also there. So by profit for the year from above working note, 22,560, 7,520, 7,520. Okay, then are there any debits? Yes, it is given in the question. Look here. It is given in the question. The partners had drawn 1,000 per month each as drawings. So, 2 drawings, 1,000 each every month into 12,000. So, in all the columns, 12,000, 12,000, 12,000. 2 balance carried on. Okay, now. So, calculate the totals. So for this guy it is 25,440, 92,320. So here also I will write 92,320, 77,360, 25,440. Correct. Now to balance carry down. This minus this. 80,320 is the balance of first guy. Okay, now you tell me what is the balance of second guy. Tell me fast. 65,360, 13,440. That's all. So are you done with partners account? Are you done with partners capital account? After this, what happened? Conversion of partnership firm into a company. Okay. So, can you tell me what is the purchase consideration paid by the new entity to the old entity? Okay. Now, so we need to calculate purchase consideration. But before that, there is one very interesting step in this question. Okay. So, look at the question. The value of other assets and liabilities were as under. Building 60,000 is given. Stock 40,000 is given. Okay. Then debtors 0 is given. Investment 20,000 is given. Liability is nil. Okay. Did they give partners capital accounts? No. But we have calculated partners capitals. These are closing capitals. Okay. We need to prepare one rough balance sheet with goodwill, partners capitals and everything to calculate cash balance. It is one indirect adjustment in the question. Cash balance is not given. Okay. Balance sheet of, what is the name of the firm? Firm name is Messrs A and B. Balance sheet of Messrs A and B. Okay. Before conversion into company as on 31/3/2016. Okay, so we'll take particulars rupees. Particulars rupees, that is liabilities rupees, assets rupees. Okay, we'll prepare this. Now, here we write partners capital account. A, B, C. Closing capitals, just now we calculated 80,320, 65,360, 13,440. Okay, then assets side, goodwill star mark. Pavan sir, why goodwill is taken? Just to calculate cash balance. Just to calculate cash balance. Okay. So what is the amount of goodwill we calculated? 39,600. Goodwill is 39,600. Then other assets and liabilities are given in the question. The closing balance of other assets and liabilities. So on 31st March 2016, other assets and liabilities is given. Building before depreciation 60,000. 60,000. But do you remember we charged depreciation 3,000? So building will be 57,000 only. Then stock 40,000. Then debtors 0 they have given. I don't need to consider it. Investment 20,000. Investment 20,000 is given. Then liabilities 0 is given. Liabilities 0. So I don't need to write any liability. Okay. But go to opening balance sheet. A liability is 0. General reserve already you distributed to partners. But A's capital 10,000 plus accumulated interest. A's loan. A's loan 10,000 plus interest accrued 600. 10,600 is his loan now. Okay, now add all the things in the liability side. 1,69,720. So 1,69,720. Now add all the assets. Add all the assets. It is showing 39,600 plus 57,000 plus 40,000 plus 20,000. 1,56,600 minus 169,720. What is that? 13,120 you got. You got here 13,120 you got. What is this, you know? Cash balance. Balancing figure. Super adjustment it is. To calculate cash balance, we have considered partners' liabilities, all the asset values given in the question, goodwill we have calculated, everything we have put in one balance sheet pro forma, and then we have got cash balance 13,120. Pavan sir, why is this important? Because beta, after this you have to prepare balance sheet of new company, no? They asked you in the question, Dekho, what is the question? In the question they asked you, prepare statement of profit and loss for the year ended 31st March 2016. This profit and loss account already we have prepared. Okay, this P&L. This is the P&L. So we have got 37,600 that is distributed to all the partners. Then balance sheet of the new company. Oh my God. So new company. Pavan sir, company has schedule 3. Correct. For new company, we will prepare balance sheet in schedule 3 requirement. Balance sheet of, what is the company name? Company name क्या है? ABC Private Limited. As on 31/3/2016 after conversion. Particulars, note rupees. This is the pro forma. First side, equity and liabilities. Under that, shareholders funds. Under that, share capital. Note 1. Reserves. Note 2. Non-current liabilities. Note 3. Current liabilities. If note is required, we'll write note. It is not mandatory that you need to write note all the time. Okay. Total. Then assets. So the left hand side is equity and liabilities. First we'll write with that, and then the assets side, non-current assets. Okay. Under that we write property, plant and equipment, and then we have intangible assets also. Tangible assets, intangible assets. Then we write current liability, current assets. Then we write total. Under current assets, if stock is there, we'll write. If cash is there, we'll write. Okay. Now, can you tell me what is the amount of share capital we need to write? Any idea? How do we calculate share capital, you know? Now, closing capital of these 3 partners put together is 1,59,120. Pavan sir, how do you know? I have highlighted in the Excel sheet, it will appear here, no, at the bottom. Okay, so 80,320 plus 65,360 plus 13,440 put together 159,120. So we'll write a note here. The new company shall issue shares to the partners of existing firm, old firm. So partners capitals. Partners capitals. So add all the 3, 159,120. Okay. How did it come? 8320. 8320 plus 65,360 plus 13,440. So put together is 1,59,120. So the new firm's share capital is 1,59,120. You understand this? Understand this? Copy. So is there any reserves? Zero. Why? Because 31/3/2016, that partners prepared P&L, they distributed profits next day morning. I am buying it. No. So technically it is not 31/3/2016. Technically it is 1/4/2016. So previous day partners have prepared one P&L balance sheet. They distributed money. Next day I am taking it. So I will not have any reserves. Zero. Do I have any non-current liabilities? Yes, this guy ES loan is there, no? ES loan. So here ES loan 10,600. Yesterday it is balance sheet of firm. Today it is balance sheet of company. That 10,600 as it is will come. 10,600. Any current liabilities are there? No, zero. So total kitna hai? 1,69,720. Then property, plant and equipment. Yesterday it was 57,000. Same thing I will take. Any intangible assets are there? Yes, very important. Goodwill is there, 39,600. Okay, then any current assets are there? In current assets, stock is there, cash is there. So look at the previous day balance sheet. Oh, investments are also there. Non-current investments are also there. Okay, we'll write non-current investments. 20,000. Then in current assets, stock and cash are there. Stock how much? 40,000. Cash 13,120. Stock is 40,000. Cash is 13,120. Cash is 13,120. Now add liability side. Will it tally? Its grandmother also will tally. This is asset side. This is liability side. So unless you prepare the dummy balance sheet you prepared above, so you can remove this bus. Unless you prepare the balance sheet you prepared for partnership above, you will not come to know what is the cash balance. You understand? Cash balance is the balancing figure. Okay, now the problem is over, but there is one more thing pending. They said in the new company, partners' share capital should be in the ratio of 3:1:1. If excess is there, give cash back to partner. If deficit is there, he will bring cash. Okay, now look here. Statement showing issue of shares in the company to partners of old firm. Statement showing issue of shares in the company to the partners of old firm. So particulars. Who are there? A is there, B is there, C is there. ABC, correct? Okay, now so closing capital. What is their closing capital? 80,320. So closing capital is 80,320. I have just it in the above line, no? 65,360. Then 13,440. Total is, add this 3. So this is the share capital. This is the total capital of the partners. This is the share capital. So shares issued in 3:1:1. So total 159,120. This is the total share capital to be issued in 3:1:1 ratio. So in the calculator, take 159,120 divided by total 5 portions into 3. So A will get 95,472. Okay, A will get 95,472 rupees of share capital. B will get 31,824. C also will get 31,824. Okay, this 3 also, if you add, it will come to 159,120. But A's existing capital is 80,320 only. But he will get 95,472 worth shares. So cash to be brought by Mr. EA. So you have 80,320, but I am giving you 95,472. So you should subscribe to shares. So EA has to buy 15,152 shares with cash. Okay. Similarly, C. Look at C. His capital is 13,440, but you are issuing shares for 31,824. So he has to bring cash. 18,384 cash he will bring. Then what about B? B's closing capital is 65,360, but he is getting only 31,824 cash to be paid to B. So this much of cash you will pay him. 33,536. You understand? So you add the total money what A and B are bringing together. A and B put together, how much they are bringing? 33,536. How much B is getting cash? 33,536. So A will pay 15,152 to the company. C will pay 18,384 to the company. B will get 33,536 from the company. So this is the last note, because in the problem they said it here. they decided to convert capitals of partners into share capital in the ratio of 3:1:1 on the basis of total capital as on 31/3/2016. If necessary, partners have to subscribe to fresh capital or they can withdraw cash if it is excess. For this para, I have prepared this. So with this question is over. How lengthy question it is? You have calculated goodwill, you have prepared P&L account, you have prepared one rough balance sheet of partners, then you have prepared the fresh balance sheet of the company, and then you have prepared apportionment of shares to partners. You understand? So many folds are there. Important model, practice it once again. Okay, so are we done with this question? This is problem number 4. Shall we go to next question?